Hello, everybody, and thank you for tuning in to Beyond Moon, a crypto wealth series. Now, today, I'll be interviewing a wealth manager. This will be from my personal perspective, but it'll give all of you an idea what it looks like to begin the interview process for people that'll help you manage your money. I hope you enjoy. Stay tuned.
So how
are you doing today?
I'm doing okay. I'm excited to talk to you. I came to financial planning through Tony Robbins' recommendation through Money Master the Game.
Okay.
And so I did a little, research on you guys. So I have you at a little bit of a disadvantage. I know more about you or your company than you know about me. How do you want to begin?
Sure. So kind of my agenda for today would be, learn a lot more about you.
Okay.
Kind of your situation and how we can help you. Talk a little bit about creative planning and give you a little bit more detail about us than you probably found online. And I can show you some examples of some work we do if you pass the control over to me later on in the meeting. But otherwise, if you could just tell me a little bit about yourself, and we can kind of go from there.
I'll give you the short story version. I'm 54 years old, white male, retired at 50. But when I say retired, I mean I quit working, sold all my stuff, and moved to Hawaii to work on an organic farm for room, basically trading my labor for room and board. I am currently in Costa Rica, where I've been for a year and a half.
Cool. What part of Costa Rica?
Oh, I'm in San Isidro de General, which is this beautiful valley community about an hour inland from the Pacific coastline, and specifically a small surfing village called Dominical.
Okay. I spent some time down in Tamarindo, but is that anywhere near there?
That's much north. You're Tamarindo is up near, like, for instance, if I was going to fly from the United States to get to Tamarindo, I'd go into, I wouldn't go into San Jose. I would go into, there's only one other airport. It's the, I forgot. What did you fly into?
I think we might have done San Jose.
I have a map right here.
A few years back. Yeah.
Liberia. That's the name of the town.
Yeah.
Yeah.
Right.
No, I'm much farther south. Much closer to Panama.
Got it.
Yeah. So that's where I am at now. The financial situation is that I have a fairly large stake in an emerging market technology, which I believe is going to just absolutely start its ascent to blast off stage here very soon. And I, having never personally had to manage millions of dollars of my own money, decided that I would start seeking out counsel from people in the wealth management industry. Start interviewing some folks, find out how they construct teams for people who, have decent sums of money, but don't necessarily want to get into every nook and cranny and dive into the minutia of everything. Not to mention, it's one thing to have like a plan in your head and even write it down. And then when you have to execute that, realize that all the things you didn't know or come into play, and you go, wait a second, I didn't think about that element of taxation, or I didn't think about this, or I didn't think about that. You thought you had it wired, you had your little back of the envelope thing, and you wrote out your little plan and you're all set to go, and you find out, wait a second, that plan isn't gonna work. I'm gonna need to do something else. So I thought I'd get a head start on it by reaching out to folks just like you.
Got it. And do you still have a residence up in the United States, or are you full-time in Costa Rica now?
I own nothing besides a sizable investment. So I have no homes, cars, nothing, zero, nada.
Okay. That might present some difficulty in working with us, just because we can only work with clients that have a U.S.-based address.
That won't be an issue. You don't have to own a house to have a U.S. address.
Okay. So you've got one where you can receive mail and everything.
I'm a
in the
U.S.
United States,
citizen.
right?
All my banking is in the U.S. I mean, yeah. All my banks have an
Okay.
address. I mean,
Got it.
have an address for me.
Right.
Of course, they have addresses.
All right, cool. And how much did you originally invest in this company?
Originally, it's not a company; it's an actual asset. 50,000.
Okay. And how much do you anticipate it's worth now?
I don't have to anticipate. I know exactly how much it's worth right this second. Believe it or not.
Okay. What?
$16,000.
Okay.
However, when it's time to actually get busy with with an outfit like yours, we're talking chunks of $500,000, $500,000, $500,000.
Okay. And what's going to be prompting the change from 16,000 now into chunks of 500,000?
Valuation in the underlying asset. So
okay.
let's
What's the
say
underlying asset itself?
it's a digital asset used in the transfer of value from one entity to another, domestic or international. It's a digital asset called XRP, and it works off of the XRP ledger and is highly integrated into several very large, prominent companies' underpinnings, their plumbing for moving a value. One being Ripple, which is a enterprise software company that has created this and just moves at the speed of light ability for. Here, I'll give you a quick example. You know what WhatsApp is? Have you ever dealt with WhatsApp?
Yeah.
Okay, so
Sure.
when you're messaging or doing something, whether it be sending a photo or messaging somebody on WhatsApp, when you create the message and you press send, in that message, you see a little tick, right? A little check mark.
Mm-hmm.
And within a second or two, you see the second tick.
Sure. Yeah.
Okay, those ticks represent, the direction of the message. So the first tick is that the message was sent. The second tick is that the message was received. And when you see those ticks turn blue, it states that it's been viewed. This is a payment system that works exactly the same way. It's a bilateral messaging system that also, with this XRP, this digital asset, conveys the value. So it's also near instant settlement.
Mm-hmm.
So it's a revolutionary technology. It's already being implemented. MoneyGram uses it today. There are many other companies around the world using it in other parts of the globe. And it's gaining traction. It's happening. There's no doubt about that. Yeah. But anyway.
All right. And so besides that, no other assets, just the investment in the company or the asset?
Yeah, for all intents and purposes, there are no other assets.
Okay. Got it. All right. And then any other income sources? Are you working while you're down there? Any businesses? No. Okay.
No income sources. Lots of ideas, lots of projects. I'm doing a lot of different things, but none of them. Well, that's not exactly true. It's peanuts. I have a small medical tourism type business. I help friends and stuff on Facebook find dentists and eye surgeons and plastic surgeons down here in Costa Rica. And when they secure their appointments and get their work done, there's a little tiny, you call it a commission, comes back to me.
Okay, got it.
But it's nothing substantial. It wouldn't be anything to write home to mom about.
Okay. And what did you find out about creative planning when you were doing your research on us?
Well, I found creative planning through Tony Robbins.
Mm-hmm. Did you go to our website or Google
Oh,
us
of
or anything
course.
like that after
Oh,
that?
yes, I
Yeah,
did immediately. You bet.
great.
For sure.
So I'm happy just to give kind of like a little background on us and how we work. Is
Please.
there anything that'd be particularly interesting for you for me to cover
Well,
while we're on the call?
yeah, there is. And I wrote this down. I'll
Mm-hmm.
tell you, okay, until my involvement with this investment, I was, for all intents and purposes, financially illiterate. As
Mm-hmm.
far as I didn't understand the difference between that or this. You know, I know that when I went out, I could make money, I could spend money, I can balance a checkbook. I've had investments throughout my life, and I thought I did pretty good, you know, researching them and picking winners and things like that for the most part. And I was a pretty good professional gambler for the 3 years that I did it when I played poker for my
All right,
living.
cool.
So I'm not talking about that kind of financial literacy. I'm talking about like understanding the history of money, understanding the history of money as it pertains to today's modern monetary theory and practices and policies from not only the U.S. but other countries. The you know, global economics. You know, my limited experience with anything outside of the United States was when I was contracting, and I had to get, you know, a ton of these incredible tropical hardwoods from Ecuador up to California because they were in part of a building project that I was, you know, supervising. And I
Mm-hmm.
was, you know, so I knew that it was a pain in the ass to move money around the world, or at least it was for
Certainly.
me. All right. So I invest in this digital asset, and now all of a sudden I become a student of finance. And so for 2 years, that is what literally I have been doing, is studying different elements of finance. So when I start thinking about financial planners or wealth managers and things of that nature, I came to learn very quickly that for the most part, out of the 350,000 of you that are operating in the United States, most of them are nothing more than a broker. In
Yeah.
other words, if I was to give them my money to invest for me on my behalf, they have no incentive really to put my needs ahead of theirs, because as the broker, you get paid on commission. So you want to sell
Mm-hmm.
products that you get the highest commission rate on versus no commission rate or very little, right? I mean, that's kind of where you're incentivized.
Right.
So I learned about this thing called fiduciary, and I thought to myself in practice and by the standard that the law is written, this is a really good thing for me. This is the kind of person I want when I'm talking about my finances and about, you know, maintaining my wealth and even building more wealth. And then I learned about this, and this would be my
Mm-hmm.
numero uno question for creative planning, is about that dual license. That 1 minute you can be my fiduciary and the next minute you can be a broker, and there's no law that says you've just changed hats. Like that hat
Right.
can change in mid-sentence, and you know what I mean? Which to me kind of
Yeah,
seems
absolutely.
kind of shady, tricky, manipulative.
Yeah, and they dance around the issue too.
But if you could, for me, I would love like your example or explanation about defining fiduciary, and then as you know, that definition and how that definition like applies to creative planning. Why did you choose that? Why is that important for you folks as a company? Well, or you personally, Darren? I mean, you know.
Mm-hmm. Yeah, so since 2004, we've been a fee-only fiduciary registered with SEC. So it's really in the fabric of you know, our company, and what we believe in is that the client's interest has to come first. So to your point, like those brokers out there, they have the suitability standard, which as long as they check that box saying that the investment they put you in is suitable for your situation, it doesn't necessarily have to be what's in your best interest. And I think that's really, you know, what you're talking about with that.
It is. What was that box
And
again?
Suitability standard. So the two standards of care.
Thank you. Suitability.
Brokers do suitability standard. Fiduciaries, RIAs like creative planning, we have the fiduciary standard. So in our client agreement, it's the very first line item saying, hey, we're putting in writing that we're fiduciaries under the Investment Advisors Act of 1940. So no ambiguity on that. Everything that we do with our clients is best interest all the time. And so 2004 was a really important date for creative planning. That's when Peter Maluk, our current owner, acquired the firm. And when he originally got creative planning, he was working as an estate planner in Kansas City, just going around helping brokers and financial advisors with complex financial planning cases for their clients. And these were mostly like brokers, like you're talking about, or investment advisors, people that their passion were investments, not necessarily the complexity of financial plans. So he was doing that as kind of a hired gun. And the owner of creative planning was getting ready to retire, had done a lot of work with Peter, and offered to sell him the firm. So that happened in 2004. Assets under management at the time was about 30 million. And as of today, we just crossed 48 billion. So in 16 years, tremendous amount of growth.
I would say that's a little bit of a difference.
Yeah, significantly. Yeah. So kind of what Peter set out to do when he first acquired creative planning, back in 2004, being a fee-only fiduciary wasn't something that, many people were even aware of.
Sure.
So he was one of the first in the country to actually be 100% committed to that model. But beyond that, what he wanted to do is replicate the family office that billionaires hire when they need help.
Right.
So the idea is to have tax, legal, it's your estate planning, your insurance, investments all under one roof. So he set out to create that. And so at this point now we've got various different creative planning employees that are all specialists. So we've got estate attorneys, we've got CPAs, we've got certified financial planners like myself, we've got salaried insurance people, so they're not motivated by selling
all in-house
commissions, all in-house. Yeah.
All in-house.
Yeah. So they're based, all the specialists are mostly in our headquarters in Kansas City. And then we've got people kind of around the country that work directly with the clients. So my role
Darren,
really is,
do you know any Spanish?
Very little. I took 3 years in high school.
Tell me if you know this. As you were talking about these in-house specialists that you have, this is the phrase that keeps coming. It just popped in there. Me gusta. It means I like.
I do know that one. Yeah, I know that one.
Me gusta. Yeah, mucho. Keep going.
Yeah,
it was like that. I love where you're going with this. I'm liking this more and more. Keep going.
Yeah. So that's really, what he set out to do. And the secret really got out around 2013. And that's when we started appearing on the top of the various, list of top independent wealth management firms in the country by pretty much all of the publications that rank that kind of thing. So Barron's, Forbes, Financial Times, CNBC, at one point all said that, we were the number one independent wealth management firm in the country. So just kind of exponential growth since then. We've been scaling up, trying to meet that demand ever since. Internally
let me fire in a question. Let me fire in a question because it's very relevant to what you just spoke to. My understanding that there was a period of time where there was literally a barrier, a wealth limit. Any potential client of yours would need to be operating at X amount of net worth or higher. And was it true that when Tony Robbins started partnering with you folks, that barrier was brought down to give access to common people?
Yeah, generally. So we've got 3 different groups now that work with different types of clients.
Sure.
There's still different asset thresholds for it. On the very high end, we have the ultra affluent group that's 25 million and up.
Right.
The team that I'm part of, just the general private wealth management, works with clients between 500,000 to 25 million. And then we've got this other group that specializes in people that have between, but our new asset threshold is 50,000. So if you have $50,000 to invest with us, we can get started. And then as money moves in, they essentially just transition you through the different teams.
I applaud you guys for that. I really do. Thank you.
Yeah. So it came kind of twofold. Part of it was accommodating the Tony Robbins relationship, because there was clients coming in from that didn't meet the traditional threshold. But also we've got clients that have children that, want to get started but don't necessarily have assets but still need the financial planning. So we wanted to build out a team that could accommodate that as well. So, kind of thinking about your situation initially, we'd have to get to the point where there was $50,000, of investable assets for us outside of what you have going on with your digital asset. But then from there, you can kind of get off and running. And our process is really based in financial planning. So it's not like we've got just one model portfolio we kind of jam everyone into. We really take time to learn about your situation, goals, and what you want to accomplish, the various sources of income you have, to meet those goals, and then structure a portfolio for you that gives you the best likelihood of success. So it's not like you fill out a risk tolerance questionnaire. It's okay, you're a moderate investor, here's a 60-40 portfolio. It's a little more nuanced than that.
Right. You're not talking about, okay, we've got A product, B product, C product, D product.
Right.
Here's a client. We're not going to look at you as a holistic person. We're going to look at you as which of those holes do you fit into? Which of these models do you fit into? Right. No, that's great, man. Good. I like that.
Yeah. Just to kind of give you an example, I came from a large but nowhere near the size of creative planning RIA, very similar space, directly competed against creative planning all the time. And that firm had 8 model portfolios, and every one of their clients had to get forced into one of those model portfolios, which presented problems. If they brought an investment portfolio to us in order to invest with that firm, everything had to be liquidated and reinvested. Taxes be damned. Very inefficient way to manage wealth. With creative planning, we've got the ability to look at the portfolio that comes over and pick and choose what to sell and integrate positions into our portfolio. So we may have 28,000 clients or different households, and we've got, I think we're up to 20,000 different strategies going simultaneously.
Sure.
So it's not the situation where we have to, have a one-size-fits-all thing. The portfolios themselves, we've got our preferred investments we choose to use, which are namely low-cost index funds. But, on the whole, we're able to really, build things specific to clients, which is a little unique in the industry.
Me gusta.
Yeah. So beyond that, I think that really covers the 3 big reasons people choose to hire us. It's the fiduciary reason you brought up initially. That's really big. It's how comprehensive we are. Having all these different people in-house is pretty cool. And then the third is that customization part. In your situation, it's a little different. It's not like you've got an investment portfolio you're bringing over, but we do have the ability to, really tailor the portfolio to things that make sense to you.
Right. Well, I'll tell you the selling points for me so far, and I am not experienced in interviewing wealth managers. That is not my forte. But I'll tell you the things that really present a value to me as somebody who knows that it's going to take a team to get where I want to go, right?
Yeah.
And having for instance, a tax attorney, and that might be an estate planning attorney and a CPA, which are 2 different people, or it's the same guy. It doesn't matter. I know that I'm going to need legal, tax, and forward strategy elements in managing where I want to go, producing the results that I have in my mind's eye that I want produced. And knowing that you folks have all of that under one roof, impressive. I like it. I like it a lot.
Yeah. Yeah. The one caveat I'll throw out is that from a tax and legal perspective, it's all U.S. focused. So we wouldn't have someone that'd be able to advise on Costa Rican issues. So
you wouldn't
just
need
a consideration
to for
on that.
me.
Yeah.
I can't imagine that you don't have an expatriate community. And when I say expat, I'm just talking about U.S. citizens who have moved out of the U.S. but still have their financial lives in the U.S. That's very common.
Yeah. Yeah, so I've got some clients that like live in Mexico and then maintain, a property or an address in the United States.
Right.
And that's how
They're
that works.
that
So
would
it'd
be
a similar
considered an
arrangement for you.
expat. All right.
Yeah.
Because no matter where you are on the planet, it takes money to live.
Mm-hmm.
Right? It does. It takes money to live. So I don't foresee myself ever not having my financial life be in the States. I just
Mm-hmm.
would like my physical life to be in a place where I can walk around in shorts and flip-flops, which,
Right.
there are many places in the U.S. you cannot do that, especially this time of year.
Mm-hmm. Certainly.
San Francisco's not one of them. So, hey, I'm from Sonoma and spent
very cool. So
30
that
years
looks
in
like your
Sonoma
number
County.
was a 707 area code.
Exactly.
Yeah.
Exactly. So, and I know
Got it.
you folks are in California, especially you're up in Northern California, right? Or you are.
Yeah. So our headquarters is Kansas City, and then I'm based in San Francisco. So we've just got different teams around the country. So when your area came in 707, it got routed to me as opposed to
because
someone else.
the geography. So I would imagine that your San Francisco team has to make a butt ton more money than the Kansas City team because the cost of living in San Francisco, I mean, other than maybe New York, San Francisco is tough. I mean, that is an expensive place to live.
Yeah. So part of it is.
Don't answer. I know you should. I don't want to know how much. I just.
Yeah.
Wow.
But there's also very
disparity.
wealthy people that live here, so you have more opportunity to work with wealthier people than you do, if you're working in the Midwest. Yeah.
Right. Okay. Cool. Let's see here. I had a couple of questions.
So that was really. Yeah, let's answer your questions. That was really the pitch and my creative planning commercial.
All right. My first question is, what are the top 5 questions I should be asking any wealth manager or financial planner that I'm going to interview for the opportunity to manage my money?
Yeah, the fiduciary one is definitely important. So you were right on base with that one.
Okay. Fiduciary, got it?
Yeah, and also being able to just distinguish between someone that's duly registered and a pure fiduciary. So
that's really one question though. Let's go. Okay, so that's one quick. Let's go to number 2.
Just general background and experience would be valuable.
There you go. Okay,
know.
Good one. Background. Okay. Number 3.
The big one: how they make money.
How do they make money? Gotcha.
So, yeah, you're going to get a lot of different answers to that.
Sure.
For creative planning, we make money from fees.
It's a fee base, so it's how well my portfolio does.
Yeah, if your portfolio goes up, our fee goes up, like not as a percentage, but as an absolute dollar amount.
No, I'm totally cool with that, as it should.
Yeah. But then you'd also want to know the fee rate. Like for us, it's like starts 1.2% on the first 500,000, and then goes to 1% on amounts from 500,000 to 2 million. So people are going to have different fee rates. So you're going to want to know
because it scales. It scales. I mean, that's I would expect
like
that.
Taxes. Yeah.
I would expect that I would pay a slightly higher percentage at 500,000 and a slightly lower percentage over 2 million, even though over 2 million, you're making a hell of a lot more on me than if I had 500,000 in there just because of the sheer number. Okay. How about numeral 4? What would be another question to ask any guy that I'm interviewing? Because I'm going to interview a couple.
Philosophy. Yeah, you'll want to know their investment philosophy and make sure that it aligns with how you see the investment world.
Got it.
And there's going to be.
I like it.
Yeah. It's probably going to fall in like either the active management or passive management camp. And active management would be someone picking and choosing investments, trading a lot, thinking they can outperform the market. And then the passive is more, the market's going to do what the market's going to do, and we're going to design a portfolio that's going to do well in all environments. So those are kind of the two main camps.
Okay. So I have a question for you, which is
sure
that I'm going to ask that question to you guys. first part of that question is, are you familiar? Now, I'm a YouTube studier guy, so I study a lot of stuff on YouTube. Are you familiar with Ray Dalio's all-weather investment strategy?
Yeah, just through. I read the section in the Tony Masters the Game.
Okay,
That's what
excellent.
covers that.
Do you folks have a portfolio structured with those principles in mind? Do you have an all-weather fund like that?
Not using the exact same investments, but our investment philosophy is globally diversified across different asset classes. So it's kind of a similar idea of investing, but not implemented the way that it's implemented in that strategy.
Okay, then the next question would be, because it sounds like you folks have the desire to be holistic in your approach. If I wanted to have a certain portion of my overall portfolio in a all-weather fund with those parameters from that chapter, is that something that could be accommodated?
To a certain extent, but it wouldn't necessarily match up perfectly with that. We can make some
96%,
within
or
it.
would it? When you say not necessarily, it would match up 30%. It would be closer to 95% or closer to 30%.
Kind of the biggest difference between the way that we would manage a portfolio and that one is that the all-weather portfolio is a really large allocation to long-term bonds, which is an area that we avoid entirely. So we wouldn't necessarily feel comfortable investing our client money in long-term bonds, simply because if interest rates rise, those types of investments get crushed, and interest rates are so low right now that we see a lot of risk in long-term bonds, and you're not getting that much more interest than an intermediate or a short-term bond. So we might, have the same allocation to bonds, but the type of bonds that we're buying
would be different.
Are a lot different than Ray Dalio. Yeah,
I got it. Okay.
We also don't invest in gold, and I think Ray Dalio has some gold exposure.
Yeah, 7%, I think, was the formula for that particular thing. Let me ask you why.
Just commodities in general, we don't see as a compelling investment to make, simply because you're only hoping someone's going to pay you more than you bought it for. There's no intrinsic value to it. We like investing in, markets and companies that, are generating cash flow, that, have earnings, that kind of thing. So just generally avoiding commodities as a
fair enough.
Kind of a rule of thumb.
Fair enough.
Yeah.
Okay, cool. I got it. I like it a lot. See, I have nothing left.
Yeah.
I have nothing else on my index card. Do you have any questions for me?
No, I think we covered everything. This is good. So, for as far as next steps go, to get started, we need that like 50,000 minimum to get started.
Yeah. That won't be an issue.
Yeah.
Oh, wait. Do you accept gold as a form of value? I'm joking. I'm totally joking.
Yeah.
No, what I would do, money is going to come when the actual US dollars are generated from what I'm doing. It's going to come in the form of, it's all going into my Schwab account, my Schwab banking account, and will go from Schwab to you.
Great.
You know what I mean?
You just hit on the fifth question I was going to give you. I think we only got 4 questions. My fifth one is going to be where the investments are custodied. And that's really important too.
Oh, let's get into that, because you're right. I knew that in my head, but because I'm so excited to talk to you, I forgot it.
Yeah. So we don't take custody of our clients' investments. We use the 3 big independent custodians. I guess technically they're going to be 2 pretty soon, but it's TD Ameritrade, Charles Schwab, and Fidelity.
Right.
So TD and Schwab are merging, so that'll be done. But if you've got a Schwab account, you simply just sign a limited power of attorney giving us authorization to trade on your behalf. That's how you hire us. You can fire us the same way. It's pretty seamless. So you continue to get statements from Charles Schwab independently, verifying that what we're reporting is actually in there. But then we also send our quarterly statement, so you can see how the performance is going, which is a little bit more detailed than the Schwab statement. So when you interview other people, you want to just get a sense of where the money is physically being held.
I still have all my own money.
Yeah.
in my
Exactly.
account.
In your name, yeah.
Now, as a limited power of attorney to trade on my behalf, you don't have access to cash me out and take money. Correct?
No. So you can give us authorization to send you money, but basically when you sign the LPOA, what you're agreeing to is allowing us to place trades on your behalf and to pull our quarterly fee, and that's it.
Okay.
So every quarter, we do pull money from your account to pay our fee, but that's the only money we take from there. You can sign a form giving us permission to send you money. So a lot of our clients that are living off of the investments will do that just so we can kind of replicate a paycheck, and send them a deposit on the first of every month. Or if there's like a one-time expense that comes up, we can just wire them money. But besides that, it's really just limited to the trading.
That is wonderful. I like that. And thank you. It's neat how we kind of organically came to number 5.
Yeah.
Because I had it in my head before we got on this call. I distinctly remember I want to address this. And then it went away in all the excitement.
Yeah.
Cool.
Yeah. So I'd say like those would be good questions to ask everyone. And then, certainly just, kind of feeling them out on the level of service they offer, whether it's just investment management or comprehensive financial planning is going to be a pretty key to distinction too. Most people have some degree of financial planning in-house, just depends how deep they actually go into the issues. So whether they're just doing like a retirement projection and calling that financial planning, or they're going to look at like every aspect of your financial life and give guidance on it, those are two different things.
I could not agree more. Thank you so very much,
Great.
Darren, for your time. I really appreciate it.
Jerry,
How's the weather right now? Where you guys are?
Right
Pretty good?
now, it's, San Francisco weather, so high 50s, a little cloudy.
Well, that's not too bad in January. You would think, though, that it should be around 71, a nice subtle breeze. I mean, after all, the Niners did just win the NFC Championship and are going to the Super Bowl.
That's true. Pretty exciting stuff.
Yeah. Here's the thing. God's always loved San Francisco more than any other place on the planet. And I think that last playoff game shows that.
We've had a professional sports team in their version of the finals for every year the last 9 years. So it's been a good run for the Bay Area.
And I've got a jersey for every one of I grew up there, so those are my local sports teams. I love the Warriors, I love the Niners, and I love the Giants. So right on. Hey, Darren, thanks for your time. And until next time I get to talk to you, Pura Vida, my friend, and be well.
Yeah, Pura Vida as well.
All right, brother.
All right.
Ciao.
Take care.
All right, bye-bye.